Good day folks, Jim here from Orchard Forex, Saturday the 26th of September. Well, stock markets have just finished the week about 1.5 to 2% up on Friday, but overall they remain very choppy as investor confidence has been undermined by the ever-growing levels of coronavirus infections in the US and in Europe, as well as signs that the global economic recovery is both slow and uneven. The prospect of a tight outcome in the US presidential election only adds to that uncertainty, while ahead of that, the inability of Congress to come up with an agreed fiscal assistance package in the US is going to hinder any real upside progress in the stock markets, I think. Looking at the US dollar, that's riding high due to safe haven demand, and as we go and look at the charts, we can see here from the dollar index that it retains a decent upside momentum and looks as though that can continue into the coming week. So the chart that we have in front of us here is a daily dollar index chart, and as we pointed out on the Telegram chat line on the website during the week, we had this reverse head and shoulders. It looked like breaking around Monday, Tuesday, and so it occurred, and we've now come up to sit right up against this trend line going back to March, which coincides basically when the stock markets bottomed out and been in recovery mode since then. The US dollar has been losing ground, but now it has got a reverse of fortunes. The daily indicators do point higher, so I do think we've got potential for further upside progress, and the measured target for the reverse head and shoulders is somewhere up around 95.5, which kind of coincides with this area here. This is the 100-day moving average, and also we've got a FIBO level here as well, so 95.60. So I think that would be the ideal target, and you can actually see the FIBO level more clearly here on the weekly chart, which being this 95.60, which is the 50% pivot of this whole move up from 88 up to just shy of 103. And so now we come back here. We've got to, as I say, we've got to break above this resistance line yet. But the weekly charts do look as though they're bottoming out, beginning to head higher. So I think we're in for further dollar strength in the days and weeks ahead. So with that in mind, we'll now go and have a look at the major currency chart, starting with the euro. Okay, so here we have a daily chart of the euro, and as you can see, the mirror image of the reverse head and shoulders we just saw in the dollar index, and the measured target would look to me to be somewhere around the 38.2% retracement level, which ties in with the 100-day moving average and also this previous top here at around 114.90. So I think somewhere in the 115 to 115.30 area is probably where we should be looking. The dailies are pointing lower. The weekly charts look as though they're topping out as well. The dollar actually had its strongest week since March, so I think we've got more in it to come this week. And if we look nearer home, we're going to get minor FIBO support down around here. This is this 115.80 level, I suppose, and then 115.30, and again 114.85. As far as looking for levels to sell it, if we were lucky enough to see 117 again, I'd probably be looking to do so, sell it there. I'd still keep a stop loss though, pretty tight above 117.70, which is the neckline. So staying short, looking to sell into rallies with a stop loss above there. Ideally, I guess about 118, just in case we do see a test of the neckline. But certainly, I think stay on the short side. The short-term charts are slightly oversold. The hourlies actually showing some bullish divergence, so a bit of a bounce wouldn't surprise, but worth selling into, I think. Dollar yen, won't spend too much time there. It has gained this week because of the dollar's strength, but overall, as you can see, dollar yen remains pretty choppy. This is a 4-hour chart. The dailies, it's kind of difficult. It did make a new long-term low, but it was a very brief affair. That was, I think, the week before last, and it's come back to look at the 23.6% level. The daily charts do point a little bit higher, so I think dollar strength will continue, but really I think there's better things to trade at the moment than dollar yen. Sterling's at an interesting juncture, not only because of the pandemic, which it seems increasingly out of control in the UK. The government are sending out very mixed messages there, but also with Brexit coming up, we've got less than 3 months now, I think, or about 3 months to go until the December 31st Brexit divorce date. And the dollar looks strong, sterling looks pretty weak. Having said that, this is a 4-hour chart and we have got some bullish divergence. So as with the euro, a bit of a bounce would not surprise. The RSIs are running out of steam on the downside. As I say, this is only a 4-hour chart. If we go and have a look at the dailies, we've actually come to sit right on the 1 and 200 day moving averages, the pink and the blue line, and as well as that being 38.2% of this entire rally. Having said that, I think the dailies do point lower. The weeklies not giving us a great deal of momentum, and this is a bit of a messy chart, but the dailies do point a bit lower. I think we probably will at some stage break this this support here around sort of 127 and eventually make our way back down. Well, this is too far away, 124.5. I think it'll probably be choppy, but we 125 over the course of the next week or two would not really surprise me. As far as selling into a bounce, well, we've got minor resistance here, so at 128, and then FIBO resistance here 128.70, and stronger resistance up towards 130. I don't think we're going to go there, but as I've said before, the bullish divergence does suggest a bit of a bounce. So I wouldn't be in too much of a hurry to get short of sterling right here. Wait for a bit of a rally. Just quickly on dollar Swiss, as with the euro, and as we pointed out on Telegram during the week on the website, the head and shoulders, it actually shows that we've got further potential as far as the measured objectives go, and it wouldn't surprise me to see a good test of this 100-day moving average in dollar Swiss, which is around the sort of 93.40 area. So that's worth watching. If we were to break that, then I think the dollar can head up towards 94.5 plus, perhaps. That's going to take a while, but the dailies are showing some positive momentum. The weeklies are reasonably flat, but they were pointing lower, but they're kind of pulling out of the downside momentum they've got, and so they seem to be building some mild upside momentum. The 4-hour charts, as I say, we've got the 100-day moving average, and we've also got this 93.40 area, which is 38.2% FIBO of the whole move down from back here. Where's that, 99 or so? So I think that's possibly a reasonable target, tying in with the 100-day moving average. The Aussie looks sick, with the RBA now heading to a possible rate cut on the 6th of October, as has been hinted at by the major Australian trading banks. The Aussies come under some serious downside pressure, and it's sitting on the 61.8% FIBO level at the start of the week from the recent early June rise. In the bigger picture, as you can see, the Aussie is currently sitting on the 100-day moving average as well. But with the indicators pointing lower, I think we're going to see a serious test of 70 cents. And then further out, if we can break that, the first FIBO support comes in around 69.60. I'd be looking to sell into rallies towards 71 now, with a stop loss say above 71.30, just in case we need to leave a bit of leeway. Going back to the 4-hourlies, this 70.90 is the 50% FIBO, and maybe you want to leave your stop loss above 71.60, but that's some way off at this stage. So 71.30, I'll be leaving stop losses. I think we're going to break down below here. 69.30 seems to be the near-term FIBO target, which is the other side of the longer-term one that I just showed you. And if we get below there, then we can head back towards these lows around sort of 67.75, 68. I think that's some way off, but some of the banks are calling for that kind of level towards the end of the year, so we'll have to wait and see on that one. But certainly selling rallies seems to be the way to go, and the same applies to the Kiwi, which I'll just show you briefly. That also has tested the 100-day moving average and the FIBO level before closing at just under 65.5. We did see this bearish divergence here, so I think there's more momentum for the downside to come, and in the nearer term, targets should be below this 64.80 level, which is this low back here. Then I think we'll see a move to 64.30. What I'll be doing now is looking to sell into rallies at around 66 cents, probably with a stop loss above this level here, 66.80. So I'd be certainly looking to sell into that. Moving along to the stock markets. Okay, here we have a 4-hour chart of the S&P, and the markets finished on a positive note, and we do have some very mild bullish divergence, so it's, in the short term that is. So we could see further upside progress towards 3,300 plus perhaps, but overall conditions remain really choppy, and I'm a bit doubtful that we're going to see any meaningful progress given the uncertainty in the economy and with the upcoming presidential election. The longer term charts do not look so positive. The dailies are pointing slightly lower, but we found some decent support in the 100-day moving average here. The weeklies though are looking increasingly toppish, so the RSIs are certainly running out of steam. So going back to the dailies, if we do break below this 100-day moving average, that's around 3,200, then I think we can probably look for a move down towards 3,100, which is where the 200-day moving average comes in. As far as selling into this strength, the 200-hour moving average lies at sort of 33.10, and the 38.2% FIBO, the move down from the all-time high here, that's at sort of 33.50. So I'd be looking to sell into that with probably with a stop loss. It depends how far deep you want to go, but so above, call it above 3,400. But I think the dailies and weeklies do signal that the downside has got the greater potential. So selling into this strength would seem the way to go. We'll just take a quick look at the ASX, the SPY. That's been awfully choppy over the last week or so. Well, really over the last couple of months, I guess. But it does actually look a little bit better bid at the start of the week. The 4-hourlies look well underpinned. The dailies not actually doing very much, but we have closed back above the 100-day moving average. And I kind of think that if the Aussie dollar does come off a bit, the local stock market might actually strengthen a tad. We could see a move back towards this 60-20 or 60-10, 60 the figure, 60-20 level. And if we can take that out back towards the sort of 6100 and these highs up here, that may be a stretch too far, depending on what the major markets do. But I kind of like the Aussie stock market early in the week. I think what I'll be doing now is I think I'd probably look to be buying a dip towards sort of 50. We're now at 59.50. Probably buying it down towards 5,900 with a stop loss below that 58.50 level. But it may just remain choppy. But I do kind of like buying the dips for a test of the top side. Finally, I'll move along to the metals, and both gold and silver have had a big week. And as you can see from the chart here, as we alluded to last week, they were coming up towards the apex of their triangle, and both have broken to the downside under pressure from the stronger dollar. Silver in particular, we'll have a look at silver. That's really had quite a serious move. And actually, as I pointed out on Telegram on the website on Monday or Tuesday, we built this what I thought was a bear flag, and it really had, it was a good move because it followed through. It had a 7% fall to the downside. Since recovered somewhat, and the 4-hour charts do look a little bit better bids. The dailies though are pointing lower. At the moment the 100-day moving average has provided the support for it. That looks as though it could come under further pressure in the days ahead, particularly if we see a stronger dollar. So a break of this 2160 level could see us all the way back down here towards the 2070, a break of which then takes us way back down below 20. Gold likewise, the moves in gold haven't been so violent. We're currently sitting above this sort of 18.5 level, 1850. But if we do break below this, then we could easily head back towards sort of 1800 and lower towards this next FIBO level, 1760 or so. The 100-day moving average here is providing some decent support, but the indicators look very heavy, and the weekly indicators in particular are not looking good at all, and we have got this bearish divergence in the weeklies. So it does look to me, now that we're back below this 1920 level, this previous all-time high back in 2011, that looks like a failure, and it would seem that there's more downside to come. So that's about it as far as the markets are concerned this week. I won't really go into oil. I normally do try and do something on oil, but it is trading sideways. It's these dailies, the 55, the 200 and the 100 day moving averages are all containing it pretty well at sort of $40 to the barrel, and the indicators are all pretty flat. So we'll leave it there. I'll just go and have a quick look at the calendar. Okay, as you can see from the calendar here, both Monday and Tuesday look pretty much devoid of anything really, apart from the German CPI due on Tuesday. But the main event of the week will be the US presidential debate. Now that's going to take place during Asian time, so we could see a fair bit of volatility there. We've also got the Chinese manufacturing PMIs coming out at around the same time, but I think for once they'll take second place on the podium. That aside, it's all really, we've got the EU CPI and the US Q2 GDP, but the main event, I think, probably at the end of the week is going to be in the non-farm payrolls, where expectations look like a rise of 875,000 jobs, with the headline unemployment rate coming in at 8.3%, just below last month's 8.4%. So we'll leave it there for now. As I say, the presidential debate, I think, will be the main event during the week. And as I say, that takes place on Wednesday during Asian trade. So we'll leave it there for now, folks. For a daily update, just go to the website, Orchard Forex, where I put up the daily outlook and any Telegram trading ideas that I've got. So until next week, have a good week's trading, and we'll talk to you then. Cheers.